And at what point are people going to make this reverse move? Wow, this ended quicker than I thought it might have. I should get out of my place in Peterborough and get back in while the condo market's still relatively soft. Simply put, the whole market rose, but condos in the downtown, generally speaking, it saw a softening versus all detached real estate. And at some point here, as behaviors go to change, when are the money flows going to change back? And when they do, obviously we could start to see a bit of a softening for the demand for Peterborough real estate. All right, everyone, Mitch here from Century 21 with another market update for Peterborough, Ontario. This is the month of May. Before we dive into the statistics this month, I want to quickly make a note that subsequent months updates are going to be split into a couple of places. So I'm going to plan to continue to do a quick update, a gloss over of the statistics here. It's sort of similar to what I've been doing, likely going to be a little bit more condensed time-wise and straight to the point on the stats. And I'm going to be doing a longer format update that's going to be on Matt McKeever's YouTube channel. So super excited about that. I know that some of you, the followers on this channel, might overlap and also follow Matt McKeever's channel. It's an amazing resource for real estate investing and really all things real estate in Canada and Ontario. So we're going to have a Peterborough segment that's being done and posted to that channel. So that's going to be long format with some slides, etc. And then we're going to have a bit of a more brief, sort of close to my regular update on here, a little less formal. So with that out of the way, guys, if you have been watching these videos and tracking along and watching on this new channel that I've split off, this one is the purely Peterborough based channel. I'm not doing any of my construction updates. I'm not doing anything else on here except for Peterborough relevant information and market updates. Make sure to subscribe if you haven't already, and of course give a quick thumbs up if you have a minute. I really appreciate all that. So let's get into the stats, guys. Last month, this is for the month of May, and we're very close to being tallied on June stats. As I shoot this, it's the last day of June, and so I did get a good glance at what's going on with June stats, and I can tell you right now that when we look at May and we look at what's happening in June, our inventory is trending downward again. It's extremely low. May's numbers. Let's look at the sales here. Current number of active listings as it was in May. There was 109 at the end of the month. That's low for this time of year, absolutely. The total number of sales was 172. So months of inventory, you guys know we talk about it every time. All we do is take the number of active listings, we divide the number of sales into that, and we're gonna get a number. It's 0.63. So 0.63 months of inventory, not a healthy amount at all. It felt like in April things were starting to slow, and that did reflect in the inventory. In April we had right around 1 month of inventory. Still not great inventory at all, but the trend was that the inventory was rising. So we saw a bit of a reversal in prices in that month. So it's interesting because most of the wisdom that I have heard through what's on the internet and anything you'll read is that as long as the months of inventory is below balance, prices are generally trending upward. But that has shown itself not to necessarily be true here, and it's a bit more complicated than that, and it's almost more like a calculus equation where it's a rate of change type of thing, where even though the inventory was still extremely low at 0.99, so just below 1 month of inventory in April, that number was still trending upwards. So the inventory was well below what they would call a balanced market. Prices in theory should still be going up, but the amount of inventory was trending slowly upwards. So we saw a change, and the price was reflective of that. So in March, the average price was $620,000. In April, it dropped way down to $586,000, and then in May, it's back up at $608,000. Now I've rounded off the hundreds there, but basically $608,000, and that's up 36.1% year over year. So we have inventory that's back down. We're at 0.63 in May. It's gone down to how low it was in January. It's not as low as it was in February and March. February and March we were like 0.3, 0.4. And we're talking very minimal differences at this low level of inventory. We're talking very small differences. But it's when you take a number that's already so low and cut it in half, that's when things were really frenzied. That's when you're seeing 25 offers, 30 offers on properties. And at the levels we were at in April, around a month, you're seeing 1, 2, 3, 4, 5 offers on properties. And it's just not enough competition to push it where you're seeing like 30K month over month gains. But we are trending back that way. So even though it feels a little bit sleepy right now, the weather's great. We are seeing just less activity generally because it's this summer and things are starting to open back up. People are just a little bit less obsessed with real estate. If the trends of inventory continues to go the way it's going, it's gone, 3 straight months now, we've seen it decrease from April. And if it keeps going that way, and pardon me, I shouldn't say that because the June stats aren't formalized, but it looks like as of right now, they were about a half a month. So it looks like it's getting crunched again. And the speed of price increases is going to move in line with that. We're going to see that average price, if one were to make a prediction of what we're going to see in June with how low the inventory is getting, is that it's going to top our May number by a good healthy amount, and the average price in Peterborough is going to be pushing well into the low 600,000s. So what does this mean if you're a buyer or a seller? You got the green light on selling. You have the whole year. Everybody, even though realistically, if you're going to try and time it and get down to at this point, if you own a property, you've realized anywhere between $60,000 to $120,000 in gain just in the last 9 months alone. So what I would say is if you obviously there's an upward price trend still continuing, but if you have any real need to sell, there's not a ton of reason to wait right now, because if you're going to try and capture the next couple months of 10 grand, yes, I understand that 20 grand in of tax-free income represents what would it take you to make 40 grand. It's a whole year's salary. But the thing is that you still gain so much, and they're getting so good right now. The price you're going to get is so high, and to try and gain that extra little bit, you do run the risk of, if anything catastrophic did happen and things turn, if they didn't turn fairly quickly. If there's any kind of credit crisis or big collapse or catalyst in the stock market. So if you're a seller right now, yes, if you hold on, the trend generally will be that every month you are going to make more money if you wait and wait and wait. But of course, you run the risk of, if anything were to happen and circumstances were to change. Then if you're a buyer right now, yes, prices are poised to continue to rise rather rapidly. So if you buy now, it's probably going to cost you less than if you buy in, say, 3 or 4 or 6 months' time. But I personally am more nervous than I have ever been in the last year and a half, and I have been pushing right up until my last market update. Go, green light on buyers. I was working with lots of buyers, very happy to help them win offers in these multiple offer situations, because I knew that they're still going to be in the green. And there's so many conflicting factors now, not the least of which is inflation, which I mentioned in the last update. Generalized inflation across all asset classes, meaning prices of everything is rising. And I think that's going to throw, it's just a bit of a new factor in the equation that didn't exist before. The real estate prices were kind of rising in isolation, so we were able to talk about them in isolation, and policy directed towards them would have been able to be conducted in isolation, and that's not really the case anymore. We've got the United States Central Bank has just announced that they are sort of changing their tune on their interest rate policies in the next, like their outlook over the next couple of years. They're talking rates will be rising sooner and more quickly than previously discussed. Obviously, Our two markets, Canada doesn't exist in a vacuum, and what happens in the United States, we're very closely tied with our banking and our economies, and it's not unrealistic to imagine that Canada is going to have to double back on its interest rate predictions here at some time soon. And of course, that is concerning because as the interest rates rise, people's buying power is going to go down. There's going to be some pressure on what's going to happen with prices here. And that's on the whole total macro scale. But when we look at Peterborough, our specific unique market, in how we sit into the bigger picture of Ontario and Canada, we have profited largely from the COVID effect of people migrating out of the city and looking for cheaper detached real estate with work from home situations. We know our vaccination rates are well on the rise. We're very close to reopenings. Yes, there could be further resurgences here, other variants, more lockdowns. It's all possible. But generally speaking, it feels like the sentiment is that we are closer to opening or being generally more open than more closed than we were in the past. So that is going to put some pressure on some people here soon. We're going to see what is really truly going to be the long-term or mid-term effects on employment. And people who are currently living in Peterborough, moved here, but their job is based out of the GTA. How soon will those people be called back? We have good reason to speculate that not all of them ever will be called back. There could be some permanent changes to the work from home situations with a lot of the big employers, but it goes without saying that there's certain jobs that just conducting teams and working in that office environment is the most productive format, and a lot of people are going to get called back. The condo market is somewhat depressed still, but it's on the rise. And at what point are people going to make this reverse move? Wow, this ended quicker than I thought it might have. I should get out of my place in Peterborough and get back in while the condo market's still relatively soft. Simply put, the whole market rose, but condos and the downtown, generally speaking, it saw a softening versus all detached real estate. And at some point here, as behaviors go to change, when are the money flows going to change back? And when they do, obviously, we could start to see a bit of a softening for the demand for Peterborough real estate. So I personally am in a bit of a holding pattern on my thoughts about what buyers should be looking to do in Peterborough right now. If you have a very long-term, buy and hold, if you're going to live in a place for 10 years, 5 years even, I'm looking favorably on that. But in terms of what's going to play out here in the next short while, if you're going to buy and you might have to sell in a year and a half or 2 years, it's anybody's guess, but my own personal feeling is that I'm less confident than I've been in the past that now's the right time. So that's basically it, guys. Generally speaking, in the short term, yes, unless we see a massive spike of inventory, and we're not quite sure how that's going to happen, prices are right now, they're on the rise. They're on the rise for, we can safely say, the next several months. And all this is barring anything major happening. There's a lot of crazy things happening. There's so much money in the stock market because interest rates have been so low for so long that there's no real yield or there's no return on investment in almost anything else than real estate and equities. So at some point, if we see interest rates start to ratchet back up and there's money to be made in debt-based products, at some point, obviously, that's going to slow down the amount of capital that's flowing into equities and the stock market. But the problem is that these things have a history of when directions change, they change quickly, and there can be a shift where there's this cattle herd mentality where people all head for the gates at once. So all it could take is a couple of real heavy interest rate announcements from our central banks, and the tide starts to turn. People are pulling money out of equities, and businesses' revenue projections start to change. And also we have these crazy supply chain bottlenecks with how hard it is to get shipping containers, all commodities, and we're reopening our economy right now. The inflation that is already really bad is arguably about to get extremely bad. And there's a lot of strange things happening in our economy, and there's a lot of things that's making it very hard to be a profitable business in most sectors right now. So a lot of uncertainty, and all it would take is a couple of really, really rocky weeks in the stock market based off of any type of bad announcements, and we could have some loss of positive sentiment, and that's all it takes for people to start the demand to start dropping for everything. And if we see the stocks really fluctuate, obviously then there's margin calls in the stock market, credit starts to get hurt, and as soon as lending and banks' willingness and ability to continue to pump out these loans gets affected in any way, shape, or form, that's the true thing that's going to slow down the demand for real estate, regardless of what happens with our continued immigration policies and our sort of COVID effect of what's going on in our city or Toronto. Regardless of any of those, if credit starts to get affected by anything wacky happening, with our major lenders, then that trumps everything and could cause a problem. And that's unpredictable. It's shown historically to happen, every so often. There's cycles, they vary between 10, 20, sometimes larger cycles, even further than that in history, years apart. But it has been 10 plus years now since we've had that type of major shakeup, since the subprime crisis, and anything can happen. So just buyer beware out there right now. That's it. Thanks, guys. We'll look forward to chatting with you next month. Hopefully you found this video useful. Again, hit the like button if you haven't and you enjoyed this video at all. I'll look forward to catching up with you down in the comments. And thanks so much for tuning in. Take care.